Hi everyone, welcome back. Hope you guys are having a great day. So this is a clip from a previously recorded video. This is a much shorter clip of it. But as always, not financial advice, for entertainment only. Do your own research. And I'm invested in closing companies. And if you enjoy this type of content, hit the like button, subscribe, helps me out tremendously. And let's get into the clip. So the next one is going to be on Riot platforms. Riot provided their Q1 financial results as well. I read through this, looking for something of interest here. And the only thing that I found that was really interesting here was obviously the average cost to mine Bitcoin for the 3-month period ended March 31st was $10,354 per Bitcoin as compared to $13,500 per Bitcoin in the same 3-month period of 2022. So that's actually good. Their costs came down, even though network hash rate has increased, but they have increased their hash rate, which I believe is also helping them get better rates possibly for the electricity because they are such a large consumer of it, right? So let's take a look at the numbers we do have for Riot here, and then we'll get into Marathon. So Riot is right there. Let's go over here. So Riot has about 173 million shares outstanding. Stock price is about $11. I think it's down to $10 now, something. Market cap obviously is around 1.9 billion right now. So they're one of the most valued ones out of the bunch that I cover here. They are at 10.5 exahash. They're supposed to get about 12.5. We talked about this in previous videos, so you guys are aware of all that. Let's take a look at some of the metrics that we have for the quarter though. So the Q1 came in at 48 million. Current quarter that we're in, I'm estimating around 55 million. We'll see if that actually comes in, depending where Bitcoin price goes, network hash rate, and all that. But right now, this is just an estimated amount. But they have been growing here nicely ever since Q3 of last year, that 22 million, 30 million, and 48 million. So they are, I think, might be close to being above the Q1 of last year. But we'll have to take a look at it down the numbers below. Last 4-quarter operating costs, self-mining. This is pretty steady here. It's at 21.8 or 21.9 million roughly, down from 22.56. So that's good. Q3 was obviously lower there, but overall still pretty good on that. Cost to mine 1 BTC minus depreciation came in at 10.3 for me on my numbers. And we've seen that kind of go up here, spike a little bit here in Q3 and then down in Q4 and again in Q1. So that's good to see as well. Bitcoin mines quarterly has been continuing to grow ever since Q3, and that's always good to see. We want to see continued growth in production. Debt to equity is still really good, 0.10 basically. Current ratio is also really good, 3.26. They have enough cash, current assets to pay off current debt 3 times over, so that's good there. Total current assets has been decreasing here, but they have been obviously installing a lot of miners, so that's contributing to that. And total current liabilities has actually come down a little bit here in Q1 to 112 million from 121, so that's also good there. All right, let's take a look at the numbers that we do have down here. We'll get back into the metrics in a second here. So assets, cash and cash equivalents was down to 158 million from 230 million. Restricted cash, actually, this is the first time that this was reported at 29.4, almost 29.5 million there. Accounts receivable went down to 19.8 from 26, so that's, yep. And then costs and estimated earnings in excess of billings was 0 this time around. Prepaid expense and other current assets was, let me zoom this in for you guys as well, plus for me, 22 million roughly. So that's actually down from 32 million here that we had. Digital currency went up to 121 million from 109 million. Future power credits was down to 271,000 from 24 million. And that was it. So total current assets is at 365 million right now. That's actually down from Q4 at 443 million. Total current assets, that's that one. Total assets also went down a little bit here to 1.2 billion compared to 1.3 billion. I'm guessing that's probably because of, well, property and plant and equipment actually went up here to 717 from 692. But we have a big decrease here. Not really any really big decreases. Why is that coming up that way? Let me see here. Total current assets, it should be that. That is that. 600, that's down a little bit here, about 10 million on that one, about 1 million there, about 8 million there. Okay, so maybe that's what's contributing to it, but still, a big difference here is obviously in the numbers up here. Cash equivalents is down quite a bit, so that's contributing to it. Current liabilities, accounts payable and accrued liabilities is up a little bit to 19.6 from 18.4, still not too bad. This is a new one here, contract liabilities net of retainage of 3.9 million. Not sure what that is about. Billing in excess, that's actually down to 0, so that's good. Accrued compensation, that's down to 0 as well. Accrued expenses is up though, 82.6 million compared to basically 0 here in the 4th quarter. Deferred revenue current portion is down a little bit here to 2.7 from 2.8. Contingent consideration is way down here to 271 from 224 million. And then operating lease liabilities down to 1.3 from 2 million. So total current liabilities went down to 112 million from 121 million. So that's good there. And total liabilities went down to 158 from 168 million. So that's 10 million less. So that's good there as well. Total liabilities and stockholder equity is at 1.25 billion compared to 1.31. So a decrease a little bit there. And then let's take a look at the revenues here as well. Revenues, they have obviously quite a few business operating portions of it. So mining, hosting, energy, and other revenue. So mining came in at 48 million, which was a nice increase here from the 30 million we got in Q4. Hosting was also up a little bit here to 9 million from 8.9, just barely up a little bit. Engineering was actually down to 16 million from 20 million. So total revenue came in at 73.2 million compared to 60 million. So that's good there. But the big part here and the problem is with hosting. If you look at hosting revenue was only 9 million, but if you look at hosting expenses, 25.6 million. Yeah, I don't like hosting for this reason. It's just one of those things that you're losing money on, and I don't like it. Otherwise, mining came in at 21, so about 50% there, a little bit better than that. Engineering was also 15 million, so that's also maybe, 5% there, 10% there, margin roughly. Selling, general, and administration went down to 12.6, so that's good. Love seeing that, down from 29. It's probably the best they've had here since Q2 and Q1. They've gone up to 16, 29, and down to 12, so that's good to see as well. Depreciation and amortization went down to 59, actually up to 59 from 46. Change in fair value down to 5.7 from 17.9. Power curtailment credits went down to 3 million, negative 3 million compared to negative 8.5. Change in fair value, contingent consideration, that's down to 0. Realized gain on sale and exchange of cryptocurrencies is negative 13.7. So that's actually up from the negative 4.9. Casualty related charges was down to 1.5 from 9.6. So that's good. Impairment of cryptocurrencies was down to 4.4 from 15.2. Goodwill, no goodwill there. Impairment on miners, nothing there as well. Total cost and expenses was down to 130 million compared to 204 million. So that's good there. Almost 70 million, 74 million roughly down from that. So that's good to see. Gross profit minus depreciation came in at 54%. Then this is just on their self-mining part of it, which is good to see. And then gross profit minus depreciation for hosting, well, that's a negative 183%. So that's not good there. Let's see. Operating expenses, interest, that came in at about negative 3.8 million from 603,000. So that's an increase there. Big increase here was on interest and other income expenses. Income loss before income tax expense was negative 60 million compared to negative 145 million. So that's good there. And the net loss came in at 55 negative million compared to 142 million negative. So definitely a good improvement there, almost 2x better, 3x better, something like that. But they still lost per share. But they lost 33 cents per share compared to 90 cents per share. So that's all good there. Okay, they are making some progress and headwinds. I just don't like the hosting thing. I think without the hosting, they would probably be sitting a lot better as it is. Okay, BTC mined, obviously that has been increasing here quarterly, so that's good to see. Cost of mine 1 BTC minus depreciation came in at 10.3 thousand, and so that's good there. They've been kind of hovering around 13.5 and right around there on average. If you look at the quarterly results, on average they've been about 13.5, so they're down to 10.3, so that's definitely good there. And what else do we have here that's kind of interesting here? Revenue. So revenue came in at 73%. General administrative came in at 12.6. That's only 17.31%, so that's good. I like to see that under 20%, ideally under 15%, if not lower than that would be perfect. So overall, they are doing the right things, getting things installed, getting miners installed and everything else. So let's take a look at how they are actually valued right now, in my opinion. So they're around $11 right now. I have them at somewhere between $8.99 with a PE of 20 and somewhere around $13.49. They are pretty profitable, right around 54% net income from gross revenue on self-mining. So I am giving them, I think they're pretty well valued, but still I would think that they can go much higher than this if they continue to do well, actually put out a positive EPS next quarter or this quarter, if possible. They still have to figure out what's going on. Well, they have to fix that one facility that has the immersion cooled miners in it. After the storm that came in through December, they're saying it's well, they're working on it. We'll see how soon they can get that resolved, but that'll definitely add at least another 1 point some exahash to their capacity, which would be good, and then that would get them pretty close to the 12.5 that they're supposed to get to, I believe. Okay, so overall, things are good, trending in the right direction. The things that we want to come down are coming down. The things we want to go up are going up. So I do think they're pretty well valued right now. Kind of, I would even value them a little bit higher as it is, just by a couple of dollars maybe, because they are such a large miner and they have all these other operating divisions as well. The only one that I don't like is the hosting. I wish they would get rid of hosting. That one just kind of blows. Okay, let me know what you guys think of that one.